Greetings and welcome. I'm Karl Ehlers and it's my pleasure to guide you through a quick overview of my VHC mean reversion algorithmic strategy designed specifically for trading the Micro Russell 2000 Micro S&P 500 and Micro Nasdaq 100 futures markets. To those of you that may be familiar with the profound contributions of John Ehlers in cycle analytics and DSP algorithmic trading strategies, indeed John is my father. His insights and guidance have been invaluable to my own trading development. However, this presentation reflects my own work and is not an extension of my father's contributions in cycle analytics and DSP algorithmic trading strategies. In light of my experience in intraday discretionary and multi-day swing trading, I was driven to formulate a strategy that would not require constant monitoring throughout the day. I wanted the strategy to be applicable on the shortest possible intraday timeframe to seize opportunities for executing intraday trades, but also incorporated automated trade capabilities within the possible multi-day swings of price. My holistic approach to the market posits that price itself is typically the best indicator of what stage of market activity an instrument may be in, whether cycling, trending, or consolidation. However, due to the inherent cyclical nature of markets across any spectrum of price over time, it is imperative to consider the element of reversion to the mean. This concept of reversion is consistently measurable across all time frames. Traders can window the price reversion from high to low in relation to a channel that is bound by specific limits. Traditional studies that use this method are often based on volume rate of change momentum or a deterministic waveform like stochastic oscillators, the RSI or Williams %R, and various forms of John Ehlers DSP oscillators. In my VHC strategy, I incorporated the measure of price volatility by factoring the instrument's daily average true range incrementally by fractional variables of pi. The rationale being that trade entries and exits are calculated at the high and low extremes of 2 times pi, analogous to the circumference of a circle. Essentially, the algorithm within my VHC strategy plots entry and exit signals that are very similar to what a discretionary trader may trade using a Bollinger Band or Keltner channel without the inordinate number of false signals typically associated with them. Through its development, my VHC strategy has been traded across multiple chart time frames, demonstrating consistent success in most cases. I have found that longer intraday chart time frames exceeding 15 minutes tend to undermine its robustness due to the associated reduction or smoothing of volatility in longer time frames. Consequently, the most effective application of my VHC strategy emerged to be intraday swing positioning on a 5-minute timeframe for both discretionary and automated trading. Let us consider the VHC strategy's performance metrics on the Micro Nasdaq 100 futures positions for approximately 1 month of continuous operation. The results were quite remarkable. My VHC strategy generated a total net profit $14,869 with a profit factor of 3.14 and a win rate of 75.38%. The strategy executed 65 trades with 49 winning trades and 16 losing trades over a trading period of 1 month, 4 days, 30 minutes. Representing only 89.35% of time in the market, with a maximum drawdown of only $1,407. In long-term testing for robustness, the VHC strategy on all 3 instruments, the Micro Russell 2000, the Micro S&P 500 and the Micro Nasdaq 100 futures instruments for an entire year, performance results remained consistent. The annualized net profit ranged from $27,536 to $43,712 depending on the chosen micro future index and position size. Even under a more conservative scenario projecting only 50% of that annualized net profit for any single instrument, the net profit returns remained commendable in generating passive income. It's important to note that the VHC strategy can be applied to a variety of instruments like equities, ETFs, energy, and index futures. However, the input parameters must be carefully adjusted and optimized for each respective instrument, which is an integral aspect of any algorithmic strategy. In conclusion, the benefits of applying my VHC algorithmic trading strategy are: it empowers the intraday trader to identify accurate entry and exit opportunities in the market for discretionary trading. It allows the swing trader to position within the market for monitored, hands-off, automated intraday and multi-day swing trade opportunities. It provides robust and consistent profit outcomes both short or long-term. I trust you will find the upcoming live stream of the VHC strategy in action insightful and encourage you to hit the subscribe button. If you like what you see, unlock your trading potential and join to become a power protege with Karl Ehlers' personalized one-on-one approach in algorithmic strategy education and mentoring with Market Traders Mentor.